Hello and welcome to Sectors Up Close. I'm David Pollard. Today we're looking at European healthcare and my guest is Joachim, Klement, Head of Strategy at Liberum Capital. A safe bond proxy, a defensive play, European healthcare has taken on a more exciting face this year as attention shifts from COVID vaccines to a new class of drugs for weight loss. And the wider sector is in good shape too, at least according to JP Morgan, who tip exposure to a rising dollar, renewal of pipelines and low patent risk as reasons to be cheerful and recently upgraded from neutral to overweight. With that, M&A could be on the cards too, according to Jefferies, whose recent survey points to a growing expectation of consolidation across the industry next year. All that said, the sector's performance has seen some major shifts and reversals this year and would most likely be down were it not for one company, Novo Nordisk, tipped by some to become Europe's first trillion-dollar company. Well, Liberum Capital's Head of Strategy, Joachim Klement, is with me. Welcome, Joachim. We'll talk about Novo in a moment. Are JP Morgan right in saying that the wider sector is in good shape? And if so, why have we seen so much volatility this year?
Yeah, the sector overall has not done a lot this year, but we now start to see outperformance all over Europe and the UK versus the market. And that is not just because of that high flyer Novo Nordisk, but it's a broader trend where medtech, healthcare services company all start to accelerate. One key driver is a slowdown of the economy. People are looking for more defensive sectors. The other one you've already mentioned, it is the strong dollar that really benefits the healthcare sector much more than most other sectors.
Well, Novo Nordisk, of course, has a huge fan base. Those who believe that these GLP-1 drugs, that's the drugs for weight loss, such as Ozempic and Wegovy, that they have a huge upside still to come. But others are suggesting that actually this is a bit of a bubble, that it could soon dissipate, this interest.
Well, my impression as somebody who managed money for the longest time is that this is kind of almost like the Nvidia of Europe. The fundamentals, the valuation of Novo, which is arguably expensive, is not a relevant factor, at least in the short to medium term. The share price is driven by expectations of what these, you might call it miracle drugs, actually can do and where they might be effective. And so as a result, I would be very careful to short this stock or underweight it in my portfolio. I've burned myself too often with these kinds of stocks that can go on for years while defying gravity.
Another stock you've been looking at is Hikma. They were the subject of quite a lot of downgrades in the early part of this month, but they themselves are very upbeat about their future. Tell us more about Hikma.
Yeah, Hikma is actually a very interesting proposition. It is a generics company focusing on more advanced, higher-level generics that are more complex to make, and it has a very attractive market position where it can benefit from about this year $26 billion of patents expiring where it can capture market share. That will grow to about $35 billion in 2 years' time. So there is a lot of opportunity for a lot of growth. The problem is that on the 2nd of November, at their last trading update, they mentioned supply chain issues in the US, which is a key market for them. But we think these supply chain issues are temporary and the stock will continue the really encouraging trend that it has shown all through 2023.
And 2024 could be the year for M&A activity, according to Jefferies. Are they right? And if so, who are the names to watch in that frame?
It's hard to forecast which company will be the target for M&A, but what we've already seen in the small cap space was heavy interest in M&A. A lot of smaller pharmaceutical companies have been taken out this year, and now we're moving more and more up the ladder and the market cap ladder. Dechra Pharmaceuticals, a classic example of a mid-cap company that has been taken out this year. I think a big sector or part of the sector where a lot of M&A activity might come is medtech, simply because that is a sector where consolidation can really help and where valuations are still attractive enough to justify significant premiums.
And would you put some names out there for us?
I have vowed an oath on my life never to do that in any sector, let alone in healthcare.
Okay, Joachim Klement, Head of Strategy at Liberum Capital, many thanks for your insights today. And that is your roundup of the European pharmaceutical sector. I'm David Pollard, and this is Reuters.